Yes, I am talking about a company which has given 965.17 percentage returns in just one single year. It's a company which is mainly engaged in the renewable energy sector, and it's one of the largest companies in India in this specific sector. Any idea, any guesses which company I'm talking about? Hi guys, Rachana Ranade here, and I welcome you all to another fundamental analysis lecture. This is a Saturday special lecture which is again on demand, on request by one of my subscribers who had requested me to make a fundamental analysis on Adani Green Energy Limited, and this request was given during the live stream. I hope everyone is aware that I do a live stream every Monday and every Thursday at 8 p.m. So don't miss the live streams, okay, if you want to ask certain questions to me. Anyway, so going back to Adani Green, let's first understand what the company does. I've taken this small extract from the annual report, and it says that the company is mainly, the company mainly develops, builds, owns, operates, and maintains utility scale grid connected solar and wind farm projects. Oh my God. If I were to take it in this same way, it sounds a little bit technical for a non-technical person like me, right? So in simple words, I'll tell you, this company is mainly into what? It's into solar and wind, okay? Solar and wind power plants. They manufacture these solar and wind power plants, and they also sell the energy which is generated out of these power plants, okay? So if you understand me clearly, two major operations of the company: number one, build these solar and wind power plants, and number two, sell energy which is generated out of these. Well, let's do a quick economy analysis. Now, while doing the economy analysis, let's understand the thought process. More and more installed capacity in India, as and how the installed capacity in India goes up, is going to be beneficial for the entire country, because we would be moving from non-renewable energy resources to renewable energy resources. And if the overall renewable energy resources are growing in India at a good CAGR, it means that the government is definitely motivating all these companies like Adani Green to build more and more solar, then solar, maybe thermal to some extent, wind, all these power plants in India. If you see here on the screen, you can see that the total growth of renewable energy has gone up from 80.8 gigawatts from 31st March 2014 to 138.9 gigawatts as on 31st March 2020. Hashtag Achhe Din. Okay, just kidding. Anyways, so if you check out of this entire growth, the maximum growth is for solar power, 54% CAGR for solar power and 10% CAGR for wind power. Why I didn't discuss others like nuclear and large hydro? Because Adani Green doesn't deal into these products, okay? So the thought process that the current government would definitely aggressively go ahead with renewable energy sector is definitely clear. Okay, like we discussed in the previous segment, let us continue with the economy and industry analysis. As I mentioned, for any company to be selected in our radar, whether it's good for investment or not, we must understand the overall economic and industrial scenario as well. See, if the government itself is not promoting that specific sector to which the company relates, then there's no point in analyzing that company. So just as an example, if we are trying to do analysis of Adani Green and the government itself is not interested in any renewable energy resource, then what's the whole point of analyzing on Adani Green, right? So that was the reason why I first discussed with you that what has happened in the past from 2014 to 2019. How did this sector progress? Now let's understand what is the way forward. What plans does the government have to give a boost to this sector? Okay, so very first one is I'm presenting to you the budget highlights, union budget highlights of 2021, wherein Nirmala Sitharaman said that we are trying to double the farmers' income. Now you might say that how is there a relation with doubling farmers' income with Adani Green? Well, they said that they are planning to tie up with farmers, wherein they will ask if they have any barren land, okay? And wherever farmers say that yes, we have barren land, we might not be able to grow crop in that, then farmers would rent out this space to the government, and the government would then utilize the space for setting up solar plants, okay? Solar plants or solar panels. And the moment government wants to set this up, they want to build the solar panels or solar power plants, is the government going to build it? No, they're going to give it to someone. And who could be that someone? That could be Adani Green, as an example, right? So I hope you're understanding the linkage of how the government's approach can definitely be advantageous to some companies, right? Second thing, they have also proposed setting up of large solar power capacity alongside the rail tracks on land owned by the railways. So you can imagine there is so much barren land right besides the railway tracks, and if that is utilized for setting up solar panels, that will lead to so much of energy generation. We can't even imagine of that. We can't just even think about how big it could be. If I'm not mistaken, Cochin airport has a very big area of solar panels, and if I'm not mistaken, also in Gujarat, in Ahmedabad, the track Ahmedabad to Baroda, there a huge solar panel has been set across the banks of the river, so that all these projects of the government, in short, help whom? Help the companies who are into manufacturing and setting up these plants. Okay. One more important point they said, that to attract more and more investment in such power sector, a concessional corporate tax rate of only 15% is to be extended, but of course that is only for the new domestic companies. Okay, so these were the major highlights. So the last point was not so very relevant for Adani, but yes, that shows again the thought process of the government towards the renewable energy sectors. Right, now that you've understood the economy and industry analysis, let's now go to company analysis. Okay, Adani Green recently won a project from the Solar Energy Corporation of India, and it's a huge project that they have won. It says that AGEL, that is Adani Green Energy Limited, will have to build 8 gigawatts of 8 gigawatts, remember 8,000 megawatts of solar projects, along with a commitment that will see Adani Solar establish 2 gigawatts of additional solar cell and module manufacturing capacity. Okay, even if we don't understand all these engineering terms, it's okay. What happens in short, 8 gigawatts of solar projects and additional 2 gigawatts of solar cell and module manufacturing is what Adani is going to do. If you remember, their dream was of 25,000 megawatts, that is total 25 gigawatts. Out of 25 gigawatts, 5 gigawatts they have already achieved. Now this single project has given them a direct 8 gigawatts and an additional 2 gigawatts of projects. Okay, now with this, in fact, there were news which said that maybe they could achieve this 25 gigawatts target well before that target as well. It's also said that this is the largest of its type ever in the world, single investment of US $6 billion. So this project is going to be a huge project. It is going to involve an investment of $6 billion US, and believe it or not, this project is going to create approximately 4 lakh direct and indirect jobs. So with this, I'm sure that as and how this project goes ahead, as and how revenue start generating from this project, is going to be a good time for Adani. Yes, so as I mentioned, 25 gigawatts was the total dream, out of which 5 currently done, 8 plus 2 in this project, which is by the SECI. And one more point which came up in April 2020, that is after the balance sheet item, okay, wherein they entered into a joint venture agreement with Total Solar Singapore Pte Limited. And with this joint venture, okay, joint venture is basically when 2 companies come together to do a specific project. Okay, that's a joint venture. This joint venture already owns 2,148 megawatts of operational solar power projects. So additional 2 gigawatts again done. Well, after studying the annual report of Adani Green, me and my team found out that there are 2 interesting points which we would like to highlight in the financial year 2020 highlights section. Okay, the very first one, the company says that we have added 575 megawatt capacity in financial year 20 and net export of 4,310 million units, and which is up by 14.5% YOY year on year. Okay, so 575 megawatt capacity, where have they increased it? You can see here that solar has an increase of 250 megawatts, wind 175 megawatts, and wind, which is of course some projects under acquisition, that is 150 megawatts. So total of 575 megawatts. Okay, so of course company is also increasing its capacity. And number two is a good input, because whatever fundamental analysis I've been doing recently, I've been saying that because of lockdown, the company's operations may have come to a standstill, their revenues might not show a good picture and all that. But their annual report mentions this point, that electricity generation has been specified as an essential service amid lockdown. Okay, see, these are the small finer points which you may not find in general websites. Okay, so if you want to know these smaller and finer details, you have to watch my lectures. There's no other choice, right? Okay, or if you also want to understand how to read the balance sheet, how to dig down deep into financial statements, I would definitely recommend my fundamental analysis course to you, which will give you a clear idea on what things are to be focused on in the balance sheet, P&L, and other documents present in the annual report. Okay, so important point, okay, that when this is given inside the annual report, they clearly mention that even if there is lockdown, our service has been recognized as an essential service. And that means that this company's Q1 might not have a very big hit on their financial statements. So I hope you have understood this special point about Adani Green. Well, moving ahead with the analysis of 5-year data, I think, but if you want to see the 5-year data clearly, I think I should just move out of the screen. Huh? So here we are on Zerodha website. I've just typed out Adani Green. You can see here 3 dots. I hope everyone is aware by now that if you want to open an account with Zerodha, link is definitely there in the description box, right? So here you can check on fundamentals, go to see detailed information. We are directed to Ticker Tape website. It's again one of the good websites wherein you can do fundamental analysis pretty easily. Okay, and if you want to just check this website out, you can also check out the link of this website in the description box. One feature I really liked about this website is about the peers. Okay, it doesn't just list down the peers, but immediately it also shows us, if I just do a single click here, it shows us what is the main business of its peer. So here you can see, yes, it is also into renewable energy, but it is into hydroelectric power plants. So not 100% comparable. For SJVN, again, renewable energy, but it is into thermal power. I'm just talking about top 3 right now. Okay, Jay Prakash, yes, again renewable energy, but hydro and thermal power. I hope you're understanding the biggest USP of Adani Green. None of them was into solar power, which is one of their main businesses, right? If you now check the financial trend, see, revenue are continuously increasing and their losses are continuously decreasing. So this gives us a very good snapshot of how the company is performing as far as their top line, that is revenue, and the bottom line, which is ideally profit, but in this case loss is concerned. But of course the losses have definitely gone down, and I hope this basic snap of the fundamental analysis is absolutely clear. So I would like to add one more point in this, that if I go to financials part, here you can see that the company's total revenue has gone up from 581 crores to 2,629 crores. That's a huge jump in like just 3 to 4 years. And if you even check out their net income, which is like the profit after taxes, it has gone from minus 46 crores, that's a loss of 46 crores, to a loss of 23 crores only. So their losses have also halved. But here something might have gone wrong is what I sense just by looking at these figures, wherein now I'm comparing 19 and 20. Here you can see that yes, their sales have gone up. If I were to check by how much percentage, their sales have grown by 23%. Okay, I'm going back to the normal view. So 2130 to 2629. So this is like a 23% growth. But if you see the net income, there is a big change. Their net income has gone up by 95%. How is this possible? Sales increases by only 23% and profit increases by 95%. Asa kasa kai? So if you want to know the answer of this, we need to dig down into the annual report. Okay, I said asa kasa kai. By the way, this is like, how is this possible in Marathi? Okay, so if we were to check about what happened exactly in the profit and loss account, which item led to a big increase in the profitability? Was there any specific expense which dropped down drastically? For that, I'm trying to show this screenshot to you. I'll try to magnify the figures, okay? It says that the depreciation and amortization expense, here it is said that refer note number 52. So there's something known as notes to accounts. So such detailed analysis you might not find on other websites. You'll find it only in my videos, okay? Right. I said this, I guess, before as well. But anyways, so you'll have to refer to note number 52, wherein you will see that the depreciation expense has gone down from 1,06,196 lakh rupees, not crore, to 39,430.57 lakh rupees. It's as good as the expenses have gone down by 1/3. Now, what special the company did to control the expenses, to bring down the expenses to 1/3? They have done nothing. They have just changed the accounting policy. They have changed the accounting policy of depreciation from written down value method, WDV method, to SLM method, straight line method. So it's okay even if you don't know these terminologies. In simple words, understand what has happened. There has been nothing great about the company. There were no specific cost cutting measures or something like that, because of which the profit has increased and the expenses have decreased. It's just that the way in which the accounting of this item was done, of course legally, that accounting methodology has changed, because of which expenses have gone down and the profitability has increased. So one last dip into the P&L, which is about the exceptional item that you can see here in the profit and loss account. It's very well mentioned that you have to refer to note numbers 50 and 57, wherein the expenditure amount is 19,143.74. Now, if you want to check what is this exceptional item, it's nothing but an accounting item which is not a regular expenditure. The word itself says that it's an exceptional item. So it will not happen, it will not be an expenditure each and every single year. Okay, now we need to understand what is this exceptional item. It's given in their notes to accounts that the company or the group has refinanced its earlier borrowings through issuance of senior notes, secured senior notes, US denominated, and rupee term loans from a bank and a financial institution. And because of which, okay, I'll tell you in simple words what has happened. Forget about the note, what is exactly written. Old loan was repaid and new loan has been taken. Okay, of course, because they might be getting favorable terms for the new one. And for this, they have paid a total amount of 17,256 lakhs for this switch from old to new. Now, you might be thinking that, has the company gone mad? Why have they paid 17,256 just for the shift from old to a new loan? It means that definitely the benefit that they would have gotten from this is much higher than this cost. Okay, so I hope you have understood what is this exceptional item all about. Right, so let's talk about quickly, it's one or two positive and one or two negative points. The very first positive point is that the shares which are pledged by the promoters have gone down from 37.23% to 14.7%. Still they have pledged shares, so that's a bad point for sure, but at least the percentage has drastically dropped, right? Second thing, I have already mentioned this, that this service provided by Adani Green is treated as one of the essential service, because of which the sales might not get impacted so much in the Q1 results. And so two positives which I talked about right now. Negatives, two big negatives that they have right now is a high debt leading to a high interest cost. You can check out their balance sheet, and I'm giving you homework. You'll have to tell me the 2019 debt. Okay, debt is the loan which they had in 2019 and the debt or the loan that they have in 2020, and by how much percentage their debt has either gone up or either has come down. Okay, but debt, currently they are having a pretty high debt followed by a pretty high interest cost, and of course they have a pretty much dependence on the government policies as well. Okay, so these were the top two positives and top two negatives of the company. Now the most important part, conclusion. Yes, I said that the company is one of the leaders in the segment of solar and wind power generation. I also said that they have recently won so many big contracts, one of the world's largest contract they won. I said that their sales are increasing, their profitability is decreasing. So many positive points. It's just one point which worries me, which is their debt levels right now. If they're able to reduce their debt significantly, then yes, I think this stock will definitely be on my radar. But currently, it is already like sky high. The stock has run up such a huge percentage that I don't think I would buy the stock at this level right now. I would wait for a correction. as I'm recording this video on 25th of June, this stock is already at a lower circuit. It's down by 5%. Yesterday also the stock had gone down. So retail investors, please don't get trapped here at this level. Okay, this stock does promise me for a long term, but right now it has already grown manifolds from roughly 40 rupees to 400 rupees in one single year. Okay, so don't invest right away at 400. I feel some correction can come in the stock, and whenever you feel that yes, it's a good time to buy, whenever you do your analysis and if you come to the conclusion that yes, I should buy it, always remember my magic formula: in small quantities, 1/5, 1/5, 1/5, 1/5 and 1/5. That's how you should buy any stock. That's how you should sell any stock. Okay, that gives you a good averaging out, and it's then you feel good that even if you don't time the market perfectly, you get a good averaging for buying as well as selling prices, right? So I hope you have enjoyed this entire in-depth analysis of Adani Green. This was a special request video, as I mentioned in the beginning. I hope you are enjoying my content. As usual, don't forget to share my video with your friends, relatives on Facebook, WhatsApp, Insta. You see the join button right over there. Click it, understand it, and I'll see you on Monday for the Q&A session for this video. Till then, take care. Jai Hind.